In today's top story, Bitcoin faces significant pressure as it drops below $62,000 amidst escalating geopolitical tensions. Meanwhile, BlackRock's BUIDL fund sees explosive growth, and European authorities crack down on crypto mixing services. Here are today's top 10 stories you need to know. Following a significant security breach that resulted in a $36 million hack, Humanity Protocol is repositioning its strategy toward enterprise AI applications. The attack has prompted the project to reassess its priorities and explore new avenues for growth. This pivot underscores the challenges that blockchain projects face in maintaining security while innovating in emerging technologies. As Humanity Protocol shifts its focus, it will be crucial to monitor how this realignment affects its market presence and partnerships within the AI sector. The ability to effectively integrate AI solutions could provide Humanity Protocol with a competitive advantage as it seeks to recover from the recent setback. Industry observers will be watching closely to see how this transition unfolds and the impact it may have on the broader blockchain landscape. Dogecoin has soared to unprecedented heights, jumping 40% to reach an all-time high of 0.68 cents. This remarkable surge can be attributed to endorsements from high-profile figures like Elon Musk and Mark Cuban, who have reignited interest in the meme-based cryptocurrency. Over the past week, Dogecoin has rallied approximately 180%, leading to a market value exceeding $48 billion. While the meme coin remains highly volatile, the recent momentum indicates a strong retail interest fueled by social media influencers. As Dogecoin continues to capture attention, its future price movements will likely be influenced by ongoing community engagement and further endorsements from influential figures. Investors will be keen to assess whether this trend can sustain itself or if it will lead to another cycle of volatility in the meme coin market. In a significant development within the DeFi space, Gleec has acquired Komodo's cross-chain DeFi infrastructure for a substantial $23.5 million. This strategic move aims to bolster Gleec's multi-chain capabilities, a crucial factor for its expansion in an increasingly competitive market. The growing demand for cross-chain interoperability has become a focal point in the DeFi sector as projects strive to provide seamless integration across various blockchain networks. This acquisition not only highlights the trend toward creating more interconnected DeFi ecosystems, but also emphasizes the need for platforms to adapt to user preferences and market dynamics. As Gleec integrates Komodo's innovative technology, industry analysts will closely monitor how this acquisition reshapes their product offerings and enhances their competitive edge. With the emphasis on interoperability and user experience, Gleec is well positioned to attract a broader audience, potentially leading to increased market share and influence in the evolving landscape of decentralized finance. Zcash has experienced a notable surge of 3.25%, after being included in Forbes' list of the top 10 cryptocurrencies to buy. This endorsement has significantly contributed to a weekly rise of 17% and an astonishing annual increase of 1,190%. The positive momentum for Zcash is attributed to improved supply dynamics, recent halving events, and increasing regulatory clarity surrounding privacy coins. This endorsement from a reputable financial publication not only enhances Zcash's visibility, but also bolsters investor confidence, encouraging both existing and potential investors to consider its long-term viability. However, privacy coins like Zcash continue to face potential regulatory scrutiny that could impact their growth trajectory. As the market reacts to this endorsement, the future of Zcash will hinge on its ability to navigate these regulatory challenges while maintaining investor enthusiasm. Analysts predict that if Zcash can successfully adapt to the evolving regulatory landscape, it may attract a wave of new investors, further solidifying its position in the competitive cryptocurrency space. The U.S. cryptocurrency market is witnessing notable shifts, with Bitcoin ETFs experiencing a staggering $425 million in net outflows. This trend suggests that investors are opting to take profits or reduce risk exposure amid ongoing market volatility, particularly following recent regulatory scrutiny. In contrast, altcoin ETFs, especially those focused on Ether and Solana, have seen significant inflows, indicating a rotation in investor sentiment toward perceived opportunities for higher returns. The outflows from Bitcoin ETFs alone exceeded $290 million, reflecting a cautious approach among investors who may be seeking alternative opportunities in the market. The shift in sentiment may stem from a growing belief in the potential upside of altcoins, even as Bitcoin's market dominance faces challenges. As this trend evolves, it could reshape the overall landscape of cryptocurrency investment in the U.S., prompting Bitcoin to reassess its role among digital assets. Moving forward, the focus will be on how Bitcoin adapts to these changes and whether it can reclaim investor confidence amid rising competition. In a strategic proposal, the Japanese government is advocating for a uniform tax rate of 20% on cryptocurrency profits. This initiative aims to simplify the tax framework for digital assets, moving profits into a separate taxation environment. The current tax system has been a significant barrier to retail participation in the cryptocurrency market, discouraging many potential investors. By lowering the tax burden, the government hopes to increase retail trading volume, particularly in Bitcoin, which has a strong presence in Japan. This change could provide a boost to market stability, offering traders more confidence in their investments. If passed, the new tax structure could lead to a more vibrant trading environment and attract a broader base of investors to the digital asset space. As discussions continue, the focus will be on how this proposed tax reform will ultimately influence not only Bitcoin's price, but also the overall growth of the cryptocurrency ecosystem in Japan. The push for regulatory clarity in the cryptocurrency space is gaining momentum, particularly concerning stablecoins. Canada is currently drafting new regulations to modernize payments, although Scotiabank warns that these changes do not aim to disrupt existing financial markets. Meanwhile, Israel's central bank has recognized the growing significance of stablecoins, citing their trillion-dollar volumes and associated systemic risks. As a part of this initiative, plans for a digital shekel are advancing, signaling the country's commitment to embracing digital currencies. In Singapore, Ripple has received regulatory approval to expand its services involving XRP and RLUSD, facilitating tokenized settlements for banks and fintech companies. This global regulatory clarity is essential for stablecoin issuers, as it reduces uncertainty and opens up new opportunities for adoption in cross-border payments. Investors keen on stablecoins may witness an uptick in usage for assets like RLUSD, USDT, and EU Stable as these frameworks develop. The continuing evolution of stablecoin regulations will likely play a critical role in shaping the future of digital finance. In a significant move against cybercrime, Europol has dismantled CryptoMixer, a Bitcoin mixing service associated with ransomware groups and illicit darknet markets. This operation, which spanned multiple countries, resulted in the seizure of servers, data, and approximately $29 million in Bitcoin. CryptoMixer had been a crucial tool for cybercriminals, enabling them to obscure the origins of their funds and evade law enforcement. The crackdown underscores the growing global emphasis on anti-money laundering efforts, as regulators intensify their focus on tools that obscure financial transactions. This operation reflects a broader trend in regulatory scrutiny of privacy coins and mixing services, which may soon face stricter Know Your Customer and anti-money laundering requirements. While this could lead to short-term price boosts for compliant cryptocurrencies, the long-term implications may create significant pressure on privacy-focused assets like Zcash and Monero, potentially leading to decreased market confidence in these coins. As the regulatory landscape evolves, it will be crucial for cryptocurrency projects to adapt effectively. The outcome of this operation may set a precedent, shaping future regulatory frameworks for cryptocurrency worldwide. In a significant development for the cryptocurrency market, BlackRock's BUIDL fund has doubled its assets under management to an impressive $900 million. This remarkable growth underscores a shift in institutional attitudes toward blockchain technology, particularly as financial markets face volatility. BlackRock, a global investment management corporation, is known for its strategic moves, and this latest increase in investment signifies a robust endorsement of digital assets. The Avalanche blockchain platform experienced a 3.02% price uptick following this announcement. illustrating how institutional investment can positively influence specific cryptocurrencies. Moreover, Hyundai's recent tests of USDT remittances on the Avalanche network and NEC's Memorandum of Understanding for biometric payments demonstrate the practical applications of this technology. As Avalanche positions itself as a key player in enterprise DeFi and cross-border payments, BlackRock's investment not only boosts immediate market confidence, but also highlights a larger trend of institutional adoption. This trend may lead to increased regulatory clarity and innovation in blockchain applications, reshaping the financial landscape. Looking ahead, as more financial powerhouses engage with cryptocurrency, we can anticipate a more integrated and dynamic financial ecosystem that embraces digital assets on a global scale. Bitcoin has experienced a sharp decline, falling below $62,000 after the Bank of Japan indicated a potential shift toward tighter monetary policy. This unexpected announcement from the central bank, which has long maintained an ultra-loose stance to stimulate its economy, sent shockwaves through global markets. The development triggered a sell-off in the cryptocurrency market, especially during the CME Futures Open, where Bitcoin dropped 5.7% over the weekend. The situation was further exacerbated by escalating tensions between the United States and Iran, with President Trump threatening military action. These geopolitical risks have caused investors to retreat from risk assets, leading to a nearly 7% drop in the CoinDesk 20 index. Among the hardest-hit cryptocurrencies, Bitcoin Cash fell by 4.8%, with Filecoin suffering a staggering 10% loss, and Polkadot plummeting 11% below its crucial support level. Investor sentiment is fraught with fear, yet a recent Bank of America survey reveals that global investors remain the most bullish they have been since February, indicating potential for a rebound if geopolitical tensions ease. As the market adjusts to these pressures, analysts will closely monitor how these developments impact Bitcoin's price and the broader cryptocurrency landscape. In particular, the upcoming weeks will be critical for determining whether Bitcoin can reclaim its previous highs or if further declines are imminent. Thank you for watching today's news roundup. Which story shocked you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.